What is good, guys? It's Rey-Jay back with another video, and in this one I want to break down what's going on with Tesla, SPY, Nvidia, the QQQ, and a couple of other tickers. I'm going to break down what's happening to the market so far and why not tomorrow is going to be a very important day as we have CPI data coming out. I'm also going to break down something very important about the other factors affecting the charts and some levels to watch for going into tomorrow. But before I break anything down all this information, before I talk about why tomorrow is going to be so important, let me just mention a couple of things. I am firstly not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you are guaranteed up to 5 free stocks. This offer ends in just 2 days. Check it out before they run out. Anyways, let's break down what's going on with the market. All right, guys, looking at the market so far, we had a pretty flat day for SPY. Nvidia had a slightly green day, but it was still flat, at least for most of the day, just kind of being stuck in its range. Same thing with the QQQ, and then Tesla was the one that outperformed after getting some good news involving a new deal. So that was good for Tesla, but the question is, how on earth is the collective market going to end up moving after CPI? So when is CPI and all this data coming out? Well, first off, at 5 o'clock in the morning, we have the European GDP numbers coming out. This could affect the market to some extent. Hopefully the numbers are not too low. What's going to be even more impactful is going to be CPI coming out an hour before the market opens. We're going to be anticipating that this should be close to expectations, hopefully. If it's a little bit hot, this could change things big time. Now, core CPI specifically is going to be more important than just CPI because the Fed is paying more attention to that, as that's been quite hot compared to CPI overall. So for core CPI month over month, we want this to be 0.3%. For core CPI year over year, for October, we want this to be around 4 to 4.1%, or very close to the previous report. If it's hotter than that, that's going to be bearish for the markets. Anything at 4.2% or higher will be bearish. So I just want to watch that very, very carefully. If it's at 4.1%, this is just in the middle, and anything below 4% would be a little bit more bullish. For inflation year over year for all items, we want this to be around 3.3%. Once again, it's not going to be as important as core CPI, so make sure you watch that very carefully. If it's anything hotter than that, this could be a little bit bearish for the markets, but it depends on the extent of it. So the previous report was like 3.7%. If it's like 3.4%, it's not going to be that bad. I would say anything above 3.6% could be a bit more bearish. Anything below 3.4% should be okay for the markets on CPI side. But once again, core is going to be the most important, so watch the core data, and we'll be breaking down more things about it. So as far as the chart goes, right, this chart right over here is showing both of the CPIs, right? We have CPI and core CPI without, that's just CPI without food and energy. You could see that CPI has been on a slight uptrend. If this continues, that would not be the best of signs. We're hoping that we see a big drop because that's what they're basically anticipating. However, for core CPI, although this has been downtrending for quite a bit, there's some risks of this going up because of other sectors out there, such as the health sector. So we'll be watching this very carefully to see if the downtrend perpetuates. Now, looking back at the health sector, there's a risk of this potentially coming up because of new changes so far in the medical services sector right over there. So we'll be watching if there's an uptrend that continues. You can see there's a slight uptrend right here for medical services, less energy services. So that's going to be very important. Shelter also went up a bit. That's going to be important too. So we'll be watching to see if these things inflate the numbers even more. That's going to be very important. If we get a hot CPI or a hot core CPI, the view of the market could change. Right now, the market thinks there's an 85.7% chance the Fed is going to basically skip on the rate hike again in December. They're not going to raise rates. That's what the market is thinking. If we get a decent CPI, this might just remain as is. If CPI is a little hot, okay, we might start to see this come down. We might see this bar right here start to go up as the market might price in another rate hike by the Fed, another 25 basis point hike. The market right now is kind of a little bit fearful, but getting closer to neutral, so it's nothing too bad. Market momentum is quite neutral, and the other indicators are still kind of like neutral, a little fearful. Market volatility is kind of neutral too, so things are just kind of like indifferent right now. We're just going to wait and see how the data reacts. One thing worth noting, however, is that on a seasonality basis, it doesn't matter which trend we're following. It doesn't have to be perfect, but I believe that there's a good chance that we're going to get a bullish December, of course. As long as Nvidia's earnings is okay and there's no like insane government shutdown that leads to just so much chaos, as long as those things are just kind of like decent, things are going to be fine for December. The market's set for a nice rally. I still believe that. But before we get to December rally, there might be a pullback coming to the markets, right? There's some of these seasonalities, these patterns that show that. We could be following either this blue pattern right here for all midterm elections or the red one right here for this cycle. I believe that there is a chance of that happening during this time. Not a guarantee, though. There have been some cycles where the market just stayed flat before just continuing higher. Know that for the end of the year, I'm leaning more bullish, okay, for December. But for now, I am looking at a potential risk for some downside. When you look at technicals and seasonality, that would be completely normal. It does not mean the market's going to crash to new lows or anything like that. Just a very healthy pullback is a possibility. Last but not least, for earnings, just as a reminder, we have the Home Depot announcing earnings tomorrow before market open, and we have more retail coming out there. We have VWE. This is going to be for like the wine estates, and just a couple of others after close. Then we're going to have Target. We have just a few others like TJ Maxx, and then we're going to be looking at Alibaba. This is like Walmart. Then we also have Ross and a few others. So we have just a couple of more retail coming out for the rest of the week, but nothing too crazy for earnings. So what do I see for the charts? What am I anticipating? Here's my answer, guys. On SPY, we basically have this white trend line. You can see this white line, which is historical resistance. We're coming very close to it, and there's going to be a risk of a rejection of this trend line. But if we break it, we would turn very bullish. We're going to turn bullish. We could see this thing fly even higher if we end up getting that break. So here's what I'm seeing on the chart. When you look at SPY on the 4-hour time frame, there is still a triple bearish divergence developing. This has been developing the entire time. This has not been validated whatsoever just yet. This suggests that there's going to be a risk of a rug pull coming. The market might see some downside, so I'm leaning a bit more in favor of that. But just to be safe, I can't promise it until we see the CPI numbers. So looking at the data, on the hourly time frame, we also have this looks like a quadruple bearish divergence on the RSI and a triple bearish divergence on the MACD. So we have a triple and a quadruple bearish divergence on the hourly, which suggests that there's going to be some downside coming soon. Many technicals are still pointing in that direction, whether you're using like the 4-hour or even the hourly on SPY. And on top of that, if you look at the daily charts, I think that this is starting to we're losing a little momentum. It's still pretty strong looking, but we're going to be very careful when looking at this. All right, so basically the market's been pumping nicely. There's no sign of the rally basically dying yet, but there's a risk of it happening looking at the current technicals. This bearish divergence suggests the market might pop a little bit more than drop, or it could just drop from here and get a very, very healthy pullback. It does not have to be a 10% crash, a 5% drop. It could just be a minor little pullback that's coming, but just know there's a risk of that looking at the technicals. So now what on earth am I going to be seeing based off the levels? And here's my answer. So when you look at this white trend line right here, we have this white trend line. I'm going to switch over to the hourly time frame so it's easier to see because this is actually supposed to be a bit more zoomed in. So anyways, if we break this white trend line, the historical resistance I was showing you, this thing could fly for 444. That would be if we get a bullish CPI and the market keeps going. 444 is the next level. If we're bearish, you're going to be watching this thing test 438. If we lose it, 436 or below is coming. Also, I want to call out that on the 30 minutes time frame, we have the 50 EMA support. We'll be watching if we break this. If so, 438 is coming. Then we have 436.5 in the lower levels. I am basically prepared for anything, and I think everyone should be prepared for anything with CPI. But I'm leaning a bit more in favor of the downside. If I were to predict this, I think the odds favored this thing coming down because we're very close to resistance, and then we have the bearish divergences. So just to be safe, prepare for anything, but just know that there's a risk of downside. For Tesla, we had a nice pump today. We got some bullish news involving Tesla's deal. This was good news for their supercharger sales. However, we're going to be watching to see how Tesla moves now. As Tesla's trying to push, we have a bullish wedge that's forming. The technicals look bullish. Also, the 4-hour time frame is looking more bullish. Looks like Tesla wants to start breaking out and get close to 230. So Tesla looks bullish. We have a nice inverse head and shoulders pattern. It might start outperforming the markets. However, just because there's an inverse head and shoulders, it does not mean Tesla has to pump every day. Tesla could still like kind of range trade between like the 217s to 225 back and forth for a little longer before we get the breakouts to 230 plus. And if it breaks the 200 EMA, it's going to turn very bullish, by the way. So we'll be watching this just in case. Technicals look bullish on Tesla, but just to be safe, we'll be watching to see how CPI affects us. So I'm basically dead in the middle with Tesla. Technicals look bullish, but CPI could be bearish based off what SPY is suggesting. So I'm in the middle with Tesla. Uh, if the technicals are correct and we're about to get a breakout, we're going to be watching Tesla break 225 and push to 228 almost, just around this 227 to 228 area. If we break that, 230 plus is coming. If we're bearish, we're going to be watching this thing basically sink down to 222 to 222.5. If we lose that, 220, is coming next. Then we have 218 for minor support, then 216.8. In my opinion, I'm actually in the middle with Tesla. CPI is unpredictable, so we'll just have to wait and see. We do look bullish from a technical standpoint, but based off CPI, you never know. So you just want to be open-minded just to be safe. For Nvidia, this is actually looking like it's favoring the bears a little bit more, just slightly more, because we have a slight bearish divergence that's continuing to develop on the chart. On the 4-hour time frame, you can see the RSI is continuing to decline. It's a little overbought, and we have a bearish divergence right here. It's also on the MACD. We hit this 490 resistance, which is historical resistance, so there's going to be a risk of it coming back down. However, just to be safe, we'll see what CPI brings us, so make sure you watch the levels and see how CPI is looking. Historically, this does have resistance around this like 490 area, so we'll see if it rejects here. If not, the next level is going to be 500 if we break and hold and close above 490. So basically, on Nvidia, if it breaks 490, we get to close above this. If we're bullish after CPI, this thing could get very close to 500 before we get some tight resistance. If we end up actually churning from here and 491 is the top, then we're going to turn bearish depending on CPI. So CPI, if it brings this down, this thing is going to drop to 485. If we lose that, it's going to be retesting 480, then 478 in these lower levels. In my opinion, the odds do favor this thing coming down soon. I think CPI could cause it, but just to be safe, okay, let's see CPI first before we become more confident. I'm just leaning a bit more in that direction, approaching CPI because of what the technicals are showing us. For the QQQ, this thing got a nice breakout. We got a back test and a bounce from this historical trend line. I was calling this move out yesterday. Now we're going to be watching 378 as resistance. We have a potential inverse head and shoulders like structure. There could be a pop coming before CPI. But after CPI, if we're bullish, watch for 380 to be tested. We could try to break that. If we're bearish, it's going to retest this trend line around 376. If we lose 376, we turn bearish. It's going to start sinking back down to 375, 373.5, and lower levels like that to fill these imbalances. I'm in the middle, but I just wanted to call out that on the QQQ, we have a new trend developing. So this got a breakout. This is actually, it didn't end up breaking its high unlike SPY. But we had this bearish divergence developing on the chart. And if this is about to play out, this could lead to a sell-off. So there's a risk of some downside on it as well. So we're just going to wait and see. It was very indecisive today. We'll just be patient and see from here. And Aapl is very simple. Basically, Aapl just shopped going back and forth and back and forth. Didn't really do anything too significant today. If we're bullish on Aapl, if we're going to get a breakout, you want to see it break 185 and push up to this imbalance. And try to make its way up to 186.6. That breaks 187.5.26 is next. If we're bearish, you want to see Aapl lose 184. If it does so, watch 183.5. If we lose that, we're going to be coming all the way down to 182. In my opinion, I'm in the middle with Aapl. I'm in the dead center with it. It's just completely indecisive right now, not really picking a direction. But if you look at the bigger trend on Aapl, the 4-hour is trying to turn a bit more bearish, so it is favoring the bears a little bit more. And also the daily chart is starting to lose some steam right here. It's starting to hit this resistance. It came very close to 189.73. So I would say that from a technical standpoint on the daily, it either pops a little bit more to like almost 190 then rejects, or it just rejects from here. In my opinion, I'm in the middle though for the most part, so we'll just have to wait and see what happens after CPI. I'm just going to go over a couple more just for like more clarity. As we approach CPI, anything could happen, so always be prepared for anything. The IWM is getting very close to a 4-hour crossover on the PPO. I'm not seeing as much bearish momentum on it, so it might try to break and try to get close to like 170 with some balance right here. It's going to try to fill this. It looks a little bit more bullish. It looks like it wants to break out from a technical standpoint, but this could be a trap. It could be completely wrong. If we're bullish after CPI, look for 170 to break. If it breaks that, 172 is coming. If we're bearish, it's going to come down to 166. In my opinion, it's looking like it's trying to accumulate and try to fill this imbalance and push up higher. So it's trying to show some life, but just to be safe, we'll see what happens after CPI. For Microsoft, this finally came down as we predicted. We have this imbalance down here towards 361. If we lose 364.08, expect that for the downside, 361. We'll see what CPI causes. If we're bullish, it's going to retest 370, then 372 is next. Right now, I do favor a bit more downside. I think this thing was kind of overbought. I think it might end up retesting 364. CPI might cause some downside, but just to be safe, always wait and see. AMD looks bearish on the 4-hour time frame. It's trying to cool off a bit. I think 115 could be tested. If we lose this, watch for 113. If we're bullish, you want to see it break 118, and then we're going to be retesting like 120. I do favor it's going to test at like 115.5 and then start dropping a bit, but just to be safe, we'll wait and see. For Netflix, if we're bullish, you want to see this thing break out. We're going to be watching this resistance at 147.5. If it breaks that, 150 is coming. If we're bearish, you want to see it lose this support right here at 443. If we lose it, 440.8 is coming. Then we have the next level down to 437 coming next. It looks like it might cool off a bit. It looks a little bit more bearish, but just to be safe, always wait for CPI. I also want to call out SoFi. SoFi, we have a bullish structure that's trying to develop here. If it breaks this and we have this wedge play out, I see 7.27. Could get close to like 7.4 actually. If we're bullish, if we're bearish, it's going to retest 6.8 or so. If it loses 7, it's going to depend on CPI. I don't fully trust this. The overall structure is still in the middle. It looks a bit more bullish from a technical standpoint, but just to be safe, it's going to depend on CPI. For just a couple of others, the VIX is trying to basically. It looks like it has this gap down here. I don't know if it's going to come down to fill this gap or not, or bounce. The 4-hour is trying to bounce on the PPO, and the daily, if you look at the daily, it is also starting to show a little bit of life. Now, I want to call out that the VIX happens to have an inverse head and shoulders like structure that could be developing. So this could be like a left shoulder. The right shoulder could be forming here. The head is right here. Are we about to see the market pop and drop, or is the market about to start cooling off thanks to this? That I don't truly know, but just to be safe, we'll be watching to see if the VIX gets a breakout. If the VIX is bullish, you want to see it break and hold 15. If it does so, watch 15.71. If that breaks, it's going to be heading for this gap fill probably to try to test the 200 EMA at 16.75. And that's going to be bullish. So I'm in the middle, but I'm leaning a bit more in favor of this like inverse head and shoulders. So maybe like a drop and pop or a pop on the VIX, which suggests there could be some downside for the markets. The SQQQ managed to close green, and we had this bullish divergence, which is starting to show some life, but it's very flat. So if we're bullish, you want to get above 17.89. If that breaks, 18.7 is coming. That's going to be another bearish signal for the QQQ and the broader markets. The dollar is very flat, going back and forth, not really doing anything, but we have a possible cup and handle like structure that's developing. So I'm in the middle with the dollar. We'll see which way it breaks. If 106 plus breaks, it's going to be bearish after CPI. If not, it is what it is. For Coinbase, the 4-hour is turning more bearish. It looks like it's going to be coming down towards 88 to 89 very soon. So we'll be watching that carefully. If we're bullish, it could break out more towards like 95 all over again, but I'm not really leaning in that direction. For Google, we have a slight bearish divergence. If this breaks out to the downside, we're going to be looking for a test of 132. If that fails us, watch 131.7, then this imbalance to 130.8. It looks like it might cool off towards the lower 130s. So just to be safe, we'll be watching it. Want to be very careful after CPI. And I forgot, if we're bullish, it's going to break out towards previous support becoming resistance at 135. If that breaks, it could get very close to 140, but I'm not really leaning in that direction. For Amazon, we have a bearish divergence. If this breaks down, you'll be watching for a test of 141.8. If we lose the 20 EMA, it's going to come down to 139. If we're bullish, you want to see 145 being tested. My guts tells me either pops and drops or drops from here. For Meta, it looks like it's holding up very nicely, still looking a little bullish, but there's a slight bearish divergence developing as well. If we're bullish after CPI, 335 is coming. If we're bearish, it's going to retest 330. If that fails us, then 325 is coming. So we'll just have to wait and see, guys. But just know that some stocks, the majority of them have the risk to the downside. looking at the current technicals, but I'm not going to promise anything until after CPI. So I'll see you guys tomorrow to talk about CPI. Please take care, remain calm, cool, and collected, and we'll see what the numbers give us. Thanks again, guys. Get ready, and peace out.